What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is February 22nd, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to go over some quick housekeeping items for Pristine Capital members. We'll talk about the price action and the indices, and we have a lot to talk about. We're going to go under the hood and check out the sectors and style factors, some of the trades I put on today, and then we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer as always, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right into it. So first things first, quick announcement. We are launching the long-term trend portfolio this Wednesday. And this is actually perfect timing because we are getting a really nice dip in a lot of the assets that I want to add to that long-term trend portfolio. I'm going to be creating that in M1 Finance. I will send out, the final portfolio in terms of what's going to go in it, and then we will launch it on Wednesday. More to come on that. I'm going to send everyone a video. Visit pristinecapital.net if you're interested in signing up. You want to have access to that portfolio. And then I included my email on this slide as well, in case you want to reach out for access. All right, so let's jump right into this price action for today. Today we had a massive red day in the Qs. We had S&P 500 down 0.77% as measured by the SPY ETF. We had the NASDAQ QQQ down 2.59%. We had the IWM small caps. I actually added a position in the small caps today, down 0.65%, and we had the Dow Jones, which was actually green on the day, plus 0.09%. So we had talked about this a bit in our pre-market session, where if we get a pullback to this 20-day simple moving average, that is definitely not the end of the world. That's something where pretty much any asset that is trending higher is going to make pretty routine pullbacks to that 20-day simple moving average. It's very normal. It's very healthy. So you can see we were kind of hovering around for about 2 weeks, and now we are getting that pullback. The market is sagging a little bit here, but we are still above this 20-day simple moving average. We're above that monthly value area, where you can see we're trading below that 5-day exponential moving average. And let's zoom down to this hourly chart. And while everything looks good in terms of the longer term trend than the intermediate term trend on the daily chart, we are in a short term downtrend as measured by this hourly chart with our weekly value area. So if you take a look right here, so when you look and you sort of zoom out, we are still trading in a pretty tight range that we've been in for the past, several weeks. But if you look, we are in a downtrend that started, maybe about like a week or so ago. And one thing I talked about in the pre-market session was, oh, well, at least we made a higher high right here. And it looks like we also made a higher low. But you can see that we actually continued lower from there. Around here, this is where we opened around this 38.72 level on the ES futures. And you can see we rallied all the way up to that weekly value area low, and we were rejected from that area on high volume. So this is definitely, not what you want to see if you are bullish in the short term, or if you have, short-term options exposure. I'm glad that I don't have any. But yeah, we'll have to see if this range holds here. So that is definitely something that I'm going to be looking out for. But definitely just want to be cognizant that, hey, we did just reject here at this weekly value area low. And I need to keep my mind open for, more continued downside. So definitely want to just be open-minded here. And then if we take a look, what's interesting is that while the S&P 500 closed down for the day, the equal weight S&P 500 was actually up. So what that tells me is that this was primarily, a result of rotation on the tape. So you can see RSP, the equal weight S&P 500, finished up 0.17%. So that is telling me pretty much a lot of the money is flowing out of these high growth, high octane tech names and it's moving into the cyclical value type plays that will benefit from the reopening, given that we have the COVID vaccine now. So if we look at the Qs, you can see the Qs were a huge beneficiary of having ultra low interest rates. And a lot of these companies, I was talking with a member about this earlier today, some of these more speculative companies that are, say, like pre-revenue, the low interest rate environment really benefits those because there's essentially like, a negligible discount rate, and you can really look out in the future and, measure these companies based on their like 2030 expected cash flows or 2025. That gets a little bit tougher as interest rates start to rise. So you can see the NASDAQ QQQ. This is the hourly chart, really taking a big hit today. Let's take a look at the daily chart. Yeah, so the NASDAQ QQQ was the actual, was actually hurt by this rotation. You can tell a lot of the money's flowing out of these names. So like if we look at, Apple, pretty much got demolished today. If we look at Tesla demolished, down over 8.5%. So really tough sledding for a lot of these mega cap tech names that investors have literally been piling into for the past 6 months to a year. Really just, if you look at this chart, there were a lot of inflows here. So now we're sort of on the back end of this. We have to see if there's a recovery or, if these names really start trending down. But in my opinion, that is going to be a problem for the market if some of these prior leaders can't really get their act together and we really just get like a stampede of outflows from these names. The other thing, if we look at these ARK funds, these also had a really rough day today. So the ARK Innovation Fund, which is essentially like the poster child for some of these like really high growth areas and more like futuristic investing, or like you're not exactly looking for the cash flows today, you're looking well out into the future. You can see that the ARK Innovation Fund closed within this value area and below the point of control. So the next level of support would be that 50-day simple moving average. But then if we look here, you can see the small caps are looking a bit better. Like the small caps, it doesn't look perfect. We closed well off the highs. You can see the small caps pretty close to that 5-day EMA, and they're well above this 20-day simple moving average. So I ended up adding a position there. We can talk about that in a couple minutes. But speaking of this rotation, let's take a deeper look at these sectors and style factors, and you'll see what I mean. So if you look, pretty much all of these sectors that have really been high performers throughout 2020 and the beginning of 2021 all pretty much got whacked today. So if you look at the cannabis ETF, YOLO, down 3.18%, not too crazy. But you can see the ARK FinTech Fund down over 4%, Next Gen Internet down over 5%, KWeb, I still have half a position in some May calls in KWeb. I took a target higher, down 5.6%. Those names had been super hot. And really a lot of these areas like biotech, look at the solar stocks. They got clubbed today, down 8.76%. So when I look at these numbers and like I'm exposed to some of these really high growth areas, so I was certainly feeling it today. It's it's not really the best feeling. But it's part of the investing game and really just what you have to put up with. But yeah, these solar stocks and some of these other areas, the vibe I was getting is like there's probably some hedge fund that's like imploding right now. So one thing I noticed, like if you look at some of these other areas, like gold miners had an awesome day, up 4.49%. And we had energy up 3.46%, regional banks up 2%. So really what it seemed like to me was all the areas that everyone is long pretty much got clubbed. All of the areas where people are underexposed, ripped higher. So what I'm thinking is like there's probably some hedge fund out there that's like long everything that got clubbed today and also short everything that just completely ripped. So if you look at these style factors, we have the high beta style factor ETF up 2%, cyclicals up 1.18%. So you can see there's strength in some of these style factors, but that's coming at the expense of, you can see this momentum style factor ETF and the growth, got absolutely destroyed. So if we look at this, like I'll pull up solar specifically. So if we look at solar, yeah, like this is, to me, this looks like someone just completely puked up all of their exposure. Like they were just caught off sides essentially, and they had to just dump everything. Yeah, because definitely like in terms of the longer term trends, I guess like more traditional energy like crude oil, if you look out like 10 years, I don't really think there's a very bright future for that industry. If you look out 10 years for clean energy, you could make the argument that there is a very bright future. So when I see an area like this, which in my opinion, provides some good investment opportunities, just completely puking like this and no one buying the dip, it makes me think that some players out there got really hammered today. And I noticed it with a lot of names like these, like Tiger is a name I own. I took a target in this name on Friday. I own this one, I think, from like $17. But yeah, this one down 11.09%. Names like Skills I have a position in. I'm going to have to figure out. I'll probably give this one 1 or 2 more days. I'm thinking I'll give it some leash tomorrow to see if some dip buyers come in. But it's very strange to see these names just completely puking out like this. So we'll have to see what happens here. But this is definitely, some major rotations on the tape. But then you have areas, like I said, like energy, which, these had a great day. Same thing if we look at the Jets ETF. This one also did okay. It didn't close on the highs, but yeah, pretty solid day. So we'll have to see what happens throughout the rest of the week. And if this rotation really leads to some sort of like risk off deleveraging, or if we're able to do this smoothly. That's sort of where my head is at. Now let's take a look real quick at the VIX. Yeah, you can see the VIX closed up 6.35%. So, red days in the VIX are tough to come by right now. But you can see it closed well off the highs. So put in a red candle here. Same thing with VVIX. VVIX closed down 0.33%. You can see this one also putting in a nice red candle. So that definitely is encouraging. But we'll have to see tomorrow. All right, so let's take a look. We'll pull up some of my trades for the day. And what I was trying to do this morning, especially when I put together my watch list for the week, I included some more value names because I was looking at the price action from Friday, and I was like, this looks pretty apparent that there's money flowing out of growth and it is flowing into value. So let's take a look. I'm just going to pull this up here. So I had on here, so I put on some IWM 225 strike calls. These were for June expiry, and I put those on for $14.67. Or excuse me, I believe these were for September. I just have to double check that and update that. But yeah, put those on for $14.67. I had an Amazon call spread that was expiring March 5th that I actually stopped myself out of that one. I just said here money's rotating out of the mega cap tech names. That's the thing where if I had an exposure at some point, earlier in time, and I'm realizing like, hey, the odds are no longer in my favor. That's a position I just want to stop myself out of, and then either reallocate to a new name or just leave that money in cash, whatever it might be. I want to recognize those losers very quickly. And then another thing that I put on was I entered some MSOS, which is the cannabis ETF, 51 strike September 17th calls earlier in the day. And that is an area of the market I'm very bullish on for the intermediate to long term. And I noticed that it just got a little bit quiet in the past maybe like 2 weeks or so. So you can see here we're consolidating in time. We're not really getting a huge pullback. But yeah, this 20-day simple moving average is starting to catch up. You can see this consolidation is coming on decelerating volume. So I really like the look here. And what I try to do for my cannabis names is I try to add to them when this space is a little bit more quiet. And then if we take a look here, so I added those two longer term exposures. And then let's see. So I added a starter position in Riot at $64.80. Yeah, this morning there was that big correction in the cryptocurrencies. So I was like, you know what? Let me just pounce on this opportunity. And I had a nice trade location for this one, which is good. And this one ended up holding this 5-day EMA. So we'll see. I gave myself some room to add more in case this one really wants to build, a nice base up here. I just wanted to make sure I got that exposure on. And then if we take a look, I closed my Airbnb essentially for a scratch. Lost a couple pennies on it. And the reason why Airbnb is definitely an asset, I think it's a strong asset. But if you look at this chart, like we're heading into earnings, and this thing is still pretty stretched. So this thing is pretty much like ripped since the IPO. And like if we take a look at this weekly chart, you can see it's very stretched. There's high expectations built into this. So this is not really a name I want to own into earnings, especially when the recovery in Airbnb likely hasn't started yet. So I just took that one off, and I wanted to take some risk off anyway. So it made sense. And then I also traded Caesars Entertainment. That one also for a scratch. Made a couple of pennies on it. But this one looked pretty solid, but then it sort of came back a little bit on me. Yeah, so you can see there were people that were selling the top here. So I figured, you know what, if I'm only up a couple of pennies in this thing, let me just pull back that risk, and then I can always enter this thing at a later date. Yeah, that about does it for some of my trades. Then if we take a look at this options order flow, you can see here a lot of call buying, which, when things get very bearish in the markets, I like to see like, okay, there's capitulatory put buying. I didn't really see that when I looked at this large options activity. So you can see players are coming in for some Apple calls. You can see they bought the 2022s. And who knows, a year from now, this might have been like the best opportunity to buy some of these names like Apple. We'll have to see what the future holds. Apple is a name that I'm likely to put in the longer term trend portfolio. So we'll see. I'll probably just include a small position there. Then we have some calls going up for Baidu here. Let's see what Baidu did. I'm sure this one had a nice little correction as well. Yeah, Baidu, you can see, was actually pretty strong. So it did have its correction. Where you can see it put in a green candle, closed down 1.21%. So it looks like people were aggressively going for Baidu. I see some Palantir activity as well. So if we look, you can see these Palantir calls coming in around lunchtime. We played this one with a butterfly last week, and we ended up winning that trade. And this definitely looks like another good butterfly candidate for this week. this is definitely a battleground stock, and I'm seeing a lot of people, especially on Twitter, that are, buying into this thing, and, they think it's just going to rip right back to the highs. They had a pretty disappointing earnings report. So that's kind of why this one interests me for a neutral play. Oh, and then one other trade I put on, I completely forgot about this one. So I took Big C for an earnings trade. So I traded the 70 by 75 March 19th call spread. I just did a half position because, it's just an earnings trade. And they reported, pretty good earnings. They raised their guidance. So we'll have to see what happens with this one. Yeah, you can see pretty much unchanged in the after hours market. So we'll see. This one, my call spread is for like $70 to $75. So it doesn't really have to make a big move for that to work. But that's just really a half position. And if we take a look, one more. And then we have as well, these Tesla call buyers coming in here. These guys came in at 950. And I noticed these guys come in a lot. And this strategy always works for them, where they just start spamming the calls in Tesla. Today was one of the first days in a while where those calls came down and really just did nothing. So we'll have to see, what the rest of the week brings. So far February has been a nice month for me, especially in terms of the competition. So I just want to make sure that, going into this final week, to just be careful, be conscious of the risk that's sort of manifesting in the market with a lot of these high growth, high octane names that are pulling back. And, definitely just try to approach everything with a risk first mindset. But that about does it for this market recap video. Hope you all had a great trading day, and I will see you all tomorrow.